Something massive just happened, and it's not coming from Wall Street, not from the SEC, not even from a major tech company. It's coming straight from the International Monetary Fund, the IMF, the most powerful financial institution on the planet. This isn't a rumor or a theory. The IMF just announced a new global framework for digital assets that could completely reshape the future of Bitcoin, crypto, and the entire financial system as we know it. And if you think this doesn't affect you, think again, because what they just set in motion could determine who controls money in the next decade, governments, corporations, or us. For years, the IMF has warned about the dangers of crypto, volatility, money laundering, lack of regulation, all the usual talking points. But suddenly they've switched their tone. In their latest policy update, they're calling for what they describe as a unified digital framework that would integrate cryptocurrencies, central bank digital currencies, and stablecoins under one coordinated system. In other words, they no longer want to fight crypto, they want to control it. Think about that for a second. The same institution that sets the rules for how countries manage their debt, control their currencies, and access international funding is now building a foundation for how digital money will move across borders. It's like they finally realized they can't stop this revolution, so they decided to become the ones steering it. This marks a huge turning point. Bitcoin started as a rebellion against centralized control, a movement for financial freedom. But now, that same technology is being absorbed into the very system it was designed to disrupt. The IMF's new digital blueprint aims to connect central bank digital currencies, CBDCs, from around the world into one global network. They say it's about efficiency and transparency, but let's be honest, it's about surveillance and control. Every transaction, every movement of value, recorded and monitored on an international scale. And here's the scary part. It's not just talk anymore. Multiple countries have already signed on to test this platform. Reports suggest that the IMF has been working quietly with over 40 central banks to standardize how digital currencies will operate. We're talking about an interconnected web where dollars, euros, yuan, and crypto assets can flow seamlessly, but only if they comply with the new digital rules. This isn't science fiction. This is happening right now, and Bitcoin is sitting right in the middle of it. You see, while some investors are panicking over short-term price drops, the real game is happening in the background. The IMF's involvement means that crypto has officially gone mainstream, but not in the way many hoped. We're entering a new phase where institutions, not individuals, will dictate how digital assets function. The irony is that this could actually drive prices up, because as soon as regulation and legitimacy enter the picture, big money follows. Hedge funds, pension funds, even sovereign wealth funds, they've all been waiting for this level of institutional clarity to pour in. According to analysts, even a 2% shift in institutional portfolios toward crypto could send Bitcoin past its previous all-time highs. But don't celebrate too quickly. Along with the flood of institutional money comes the flood of rules. Taxes, restrictions, compliance requirements. It's the trade-off between freedom and access. And if you think Bitcoin's decentralized nature protects it, remember this. Governments don't need to ban Bitcoin. They can just control the on-ramps and off-ramps, exchanges, payment processors, wallets, and stablecoins. They can make it so that unless you play by their rules, your crypto can't move. This is where the IMF's plan becomes truly powerful. By establishing a standardized framework, they make it easier for countries to cooperate on enforcing global crypto policies. No more loopholes between jurisdictions, no more escaping regulations by switching exchanges. Everything will be traceable. Yet despite how dystopian that sounds, there's another side to the story. For the first time, crypto will have a seat at the table of global finance. This opens doors to massive adoption. Imagine a world where your crypto wallet can interact with banks, global payment systems, and official digital currencies without friction. The IMF isn't trying to destroy crypto, they're reshaping it into something that fits their model. And whether we like it or not, that could bring both stability and mass accessibility. The question is, will Bitcoin remain Bitcoin when it's fully integrated into this system? Or will it become just another asset class under global control? Because at its core, Bitcoin's value comes from decentralization, the idea that no one, not even the IMF, can dictate its rules. But the reality is that as governments, corporations, and institutions adopt it, they'll inevitably try to bend it to their will. We're already seeing it. The US Treasury is pushing for tighter stablecoin oversight. The EU has its MiCA regulation already in effect. China is promoting the digital yuan internationally. And now, the IMF steps in as the global coordinator, connecting all these systems into one. That's not coincidence, that's strategy. They're setting the stage for a hybrid world where CBDCs and crypto coexist, but under one watchful eye. Now, let's think about what this means for investors. Short term, it's going to cause volatility. Every new regulation or announcement will send waves through the market. But long term, it could lead to the biggest wealth transfer in modern history. Because those who understand how to navigate this new regulated landscape will profit immensely, while those who cling to the old, Wild West, model will be left behind. The coming years will be a battle between decentralization and integration, between freedom and oversight, between innovation and control. And the IMF just declared which side it's on. But remember, this isn't the end of crypto, it's an evolution. Every major technological revolution goes through a stage of consolidation before mass adoption. The internet did. Social media did. Now it's crypto's turn. The institutions are coming, but that doesn't mean individuals are out of the game. In fact, early movers, people who understand this shift, will have the advantage. The key is adapting, not resisting. Find the projects that align with this new regulated reality, those working with interoperability, compliance, and global payments. Look for tokens that will survive integration, not just hype. Because while the IMF may be changing the rules, the opportunities are still there for those who can see beyond the headlines. This moment is bigger than price charts or daily volatility. It's about power, who controls the future of money. And right now, we're witnessing a silent power shift on a global scale. Bitcoin started it, but the IMF wants to finish it their way. The only question left is, will you adapt to this new era or get left behind? Because one thing's certain, crypto as we know it will never be the same again. So stay alert, stay informed, and don't let the noise distract you from the signal. If you found this breakdown helpful and you want to stay ahead of what's really happening in the crypto world, make sure to hit that like button, subscribe, and turn on notifications. Because in this market, every update counts. What the IMF just did isn't the end. It's the beginning of the next chapter in digital finance. And if you're watching this right now, congratulations, you're already ahead of most people.